Well, thank you for joining us. I'm Marlon Bowling with you as we get ready to open up our trading session here on a Monday. We are joined by Rich Nelson of Allendale Incorporated in McHenry, Illinois. And Rich, thanks for joining us here this morning. Right off the top, USDA has some news that came off the wire. We have another sale of soybeans this morning. And this time around, it is once again to that country of Argentina. Very interesting here. This is basically the equivalent of 2 shiploads. 120,000 metric tons of soybeans sold to Argentina, and it's for the 2018 and 2019 marketing years. So this will be for our new crop, and we can add that into the hoppers. So interesting, the demand that we're developing from one of our key competitors. Isn't that interesting?
Certainly is right. And like most of these other sales here we've got so far from Argentina, these are new crop sales. And in fact, just this month so far total, we've got numbers 430,000 tons of this new crop going to Argentina. Trade expectations maybe 500,000 to 1 million eventually here, but certainly for right now, a very aggressive pace starting out from these newer type of buyers here for us.
Now, you might explain to our viewers and listeners how this works. They're basically going to buy our soybeans on a deferred basis and then crush them and sell them as meal?
That sure is right here. So their main focus is not quite selling whole soybeans. Their focus is selling the products themselves with their very heavy and established and mature crushing industry. So certainly from their standpoint, they want the whole product to sell the parts here.
Now, overnight, excuse me, on our Globex trade, it looks like corn was a little bit firmer here. We can take a look at the prices. It looks like overnight we had the corn basically about 2 to 3 cents higher. We had July up 3 at 401.5, so it's back up above that $4 benchmark. And December 2 1/4 higher at 416 3/4. Soybeans were higher overnight. We had the July contract on the soybeans up 5 1/4 at 1061.5. November was up 5 1/2 at 1052.5 per bushel. And in the wheat trade, this is the one that has garnered a lot of attention, of course, here in recent weeks. July Chicago wheat, check it out, up 8 1/2 at 507. That's on the high of the overnight trade. In Kansas City wheat overnight, we had July 5 3/4 higher. It showed a last trade of 536 1/4. And now on the Minneapolis wheat, on the spring wheat trade, we had July up 7 at 615 per bushel. That also was on the high of the overnight trade. So today, after the markets closed, we're going to get our new crop progress and condition numbers. The planting progress on the corn last week was way behind already, wasn't it?
You're certainly right. It was 5% complete when we were normally about 14% at this time. Now, for our discussion here for today, as far as our comparison, normally we'll be 27% complete. So it's probably unlikely that we made up our whole difference. So we will still be behind the 5-year average, but hopefully with our current forecast, maybe some of this will be changed here in the next few days here.
What about that spring wheat number at only 3% last week when it should have been 25? What do you expect there?
You know, on this one, this will also be maybe a little bit of a problem here as well. The 5-year average will jump to about 36% complete, and we probably didn't see much planting activity in the north here over the past week. So on this one, we'll still be quite far behind. Like I said, the focus now is actually on the coming forecast and the importance of this warmth here.
Do you think enough premium has been built into that spring wheat market yet on account of the planting delays?
You know, for right now, I think it still is more or less needed. I think for right now, we're still going to discuss probably on corn, soybean plantings that we will eventually get caught up, and it won't be any serious concern here for us. Spring wheat, though, I think for right now, it is a major valid concern for us.
Quick look at cotton overnight. We'll see where it had the last trade a little bit ago, and July was up 5 points. December new crop down 10 points at 79.17 per pound. We'll come back in just a moment, and we'll analyze what to expect in our livestock trade on a Monday when we come back right after this. Let's go back to our conversation with Rich Nelson of Allendale Incorporated in McHenry, Illinois. We're going to focus on the livestock trade. And Rich, I understand that we had some cash cattle market activity that broke loose pretty late last week. And as we were talking during the break here, you said that actually carried over into the weekend. That's a little bit unusual.
Certainly right here. So we did hear some sales, of course, to 124 Friday, which were very strong for us after the lunch hour. And then later on, we heard some light sales, in fact, both late Friday afternoon and then again Saturday morning, 126 here. So in terms of the numbers, that won't be the bulk of the week's movement, obviously, but certainly a few late numbers adding a small touch of positive news here to the cattle market.
Okay, now talk about the wholesale trade on the beef and on the pork side. If we look at the beef cutout values that were reported Friday afternoon by USDA, we had the choice established at $1.59 higher. On the other hand, you had the selects once again going down 16 cents in value. Now they were priced at $204.32, so they do have the selects up above that $200 benchmark, but it's having a hard time getting both of them to go the same direction all the time.
It certainly is. And, of course, last week was generally a winner here for us on this wholesale beef discussion point. Choice did end up about 9.76 over over the previous week. So good gains posted. And one thing we've got to point out is these numbers, this wall of cattle we talked about, so far not showing up. Last week's scale was 1% under last year. So this certainly shows for right now the supply issue is still quite a bit more reasonable than we expected by this point in time.
I wanted to take a look at the pork carcass cutout values that were reported Friday afternoon as well. And here on the carcass cutouts, we were up 76 cents in value, trading at 68.61 per hundredweight. The loin market gained $1.27 at 72.81. The hams were up 65 cents. We had the belly market just 32 cents higher at 83.98, still well below that $90 threshold. It's really been struggling here lately.
It certainly has here. So we've got about a 70-cent gain here for last week's wholesale pork as a whole, and that probably will be considered a little disappointing after what's been a very strong cash hog-based rally here before this. So certainly for the short term, still some concerns right now about this pork market, which are not getting fixed here just yet.
Is that normal for this time of year? Because we're right on the cusp of barbecue season here.
And that's certainly true. We should be at this point where this lower supply, which is now beginning to show up here, should be meeting a very strong resurgence in demand here. So at this point in time, this is certainly quite a bit disappointing here, this lack of real price movement, at least on the wholesale end here.
Well, Rich, thanks for all the insight into the markets. Always a pleasure to talk to you, and thanks for helping us open up the week. Rich Nelson of Allendale Incorporated in McHenry, Illinois.